Welcome back to Stock Tricks with Nick. In today's video, I'll be sharing my favorite 10 trade ideas going into the week by breaking down each stock's fundamentals, group strength, fund ownership, and technical setups. The second half of last week saw sideways trading as the market digested their 7% gains off their low. Both the S&P 500 and NASDAQ are now above their 50-day moving average, and the leading stocks are consolidating after their breakouts. Quick disclaimer before we start, this is not financial or stock advice. This is for educational purposes only. Please do your own due diligence before trading. Trading comes with financial risk. With that disclaimer out, here are the 10 stocks that we'll be covering in today's video. If I share a setup that fits your criteria, please help me out by smashing the like button and subscribing to my channel for more trading content. Now let's get into the charts starting now. First we have AYI, and this gapped up after earnings and is now consolidating above its 8-day exponential moving average. It's got a group strength rating of B-, which is a little bit on the lower end. It's in building construction, products, and miscellaneous, which is 86th out of 197 on a relative strength basis for that group. Within the group, it is the third strongest out of 41 stocks on relative strength and 8th strongest out of 41 on a composite overall rating. It's got a relative strength rating of 93, the individual stock itself, an accumulation distribution rating of B+, that means more people are buying the stock than selling the stock, higher volume days come on up days versus down days. Composite rating of 85, which is nice to see. Let's take a look at earnings. We went from -5, +15, +43 to +39. Good, strong growth the last 3 quarters. Sales, similar story, -5, -6 to +16 and +11. After-tax profit margin has been about 10% growth year over year. Another thing I like to check is fund ownership. Is big money coming into the name? And you can see we've been pretty steady. Last December to June, we were declining and then dropped to the low in March, and now we're starting to pick up again as money flows into the stock. So it's good to see the last 3 quarters, the fund ownership has been increasing. Jumping to the chart, you can see that this gapped up about 20% on earnings and then pushed higher, had that post-earnings drift, so about 25% move from the low in the base here. Since then, we've pulled back, I want to say it was 6%? No, 4.5% to the 8-day exponential moving average. This is a trade where the more time we could spend just kind of tightening up above this 8-day exponential moving average, the better the trade setup happens. Couple different places you could buy is a break over Friday's high, 207.39, or the previous day on Thursday, this got out over the previous day's high, and then sellers took control and pushed this down. So if you're waiting to a break over 209.96, the high from Thursday, there's less of a chance that sellers are going to step in there. But then you don't get it for the lower price. It's always about managing risk and trading. So those are the 2 levels that I'll be looking for. Again, more consolidation, more sideways action, the better for this setup. Next, we have Celsius Holdings, CELH. This has got a relative strength rating of 98, very strong this year. And group strength B+, beverages non-alcoholic, 62 out of 197 there. Within that group of 18 stocks, it is the strongest on a relative strength basis and second strongest on a composite basis. It's got a weaker accumulation distribution rating, D+ there, so that's 1 strike against the setup. No setup's going to be perfect, but we want to identify as much probability as we can before we take a trade. Composite rating, 85, pretty solid there. Looking at the earnings, we have +100, +200, even, and then +150, this most recent in June. Its earnings this season is November 12th, just to call out there. Sales +80, +48, +78, +117. Nice sales growth there. And then after-tax profit margin increasing, but now starting to do so at a decreasing rate there. Checking fund ownership, that has been drastically increasing, went from 85 December of 19 to 392 in September, and that continues to increase quarter over quarter. Looking at the chart here, we had this nice 50% move higher, and then since then we've consolidated for about 4 weeks, 27 days, about 4 weeks sideways. You can see the 20-day, the 8-day exponential moving average, basically right at the same price right now. I really like the shakeout on Friday. We undercut the lows basically of the week, not on Monday, but Tuesday, Wednesday, Thursday. We shook out under the lows there. So that took out any traders that had stops too tight there. We found buying support right at the end of this volume profile here, and then we still closed above the 20 and above the 8-day exponential moving average. With this, we have a 2-day pivot to work with, lower in the base, So a break over Thursday's high, 96.60 would be a potential buy point, or Wednesday's high, 97.85. Similar story to AYI. If you buy higher, there's more of a chance that it is actually going to hold that move, but you get it for a higher price. So this is CELH. Next we have CLR. This is in oil and gas, which has been a very hot group right now. It's ranked second out of 197 groups, so you have that A+ group strength rating. Within that group, it's 13th on a relative strength basis out of 59 and 25th on a composite basis. It has a relative strength of 98. So the fact that 98 puts you 13th in that group just shows you how strong the group is recently. It's got a B- accumulation distribution rating and a 93 composite rating. Looking at the earnings, they were negative the first two quarters this year, but then over 1,000% earnings per share growth, and then plus 228 this most recent quarter. Sales turned it around, went from minus 37, minus 30 to plus 38 to plus 603 this most recent quarter, year over year. And after-tax profit margin, also similar story, plus 23, plus 27 year over year. Checking the fund ownership, like you'd expect with the negative earnings earlier on, fund ownership had been declining, went from 710 all the way down to 323, but similar to AYI, this has been pushing higher the most recent two quarters, so fund money is flowing into the stock for CLR. Looking at the chart for CLR, it's obvious why the group has been so strong of late. This had a 72% run before pulling back initially 8%, and then eventually 11% from the highs. I really like this kind of double pullback where we pulled back, found support at the 8-day, bounced, and then we undercut that low. So anyone who got in on this pullback probably put their stop around the low, got shaken out, and now it's setting up again, just at a lower price, that those people that got shaken out might want to get in. The people that buy at the 20-day moving average now wants to get in. So we have kind of a confluence of indicators setting up here. We have a 3-ish day pivot to work with. A break over 51.78, the high from Wednesday, would be a potential buy point for me. That would get us over the 8-day exponential moving average and right to the main part of this higher volume shelf as well for CLR. Next we have Coinbase, and this is going to be a main focus of mine going into the week. For full transparency, I do have a position already, but looking to add to it if we get some consolidation and a possible breakout point later on. Cryptocurrency right now has been a very, very strong group. So group strength rating, A-, 37 out of 197. Coinbase is grouped in with computer software, so it's crypto and computer software. You got to take that into consideration. It's got a composite rating of 96, accumulation distribution rating of A-, both very strong there. Relative strength rating for the stock is lower at 64, just because it's going through the right side of its IPO base right now, and we opened so high and then pushed lower. So it's going to have a lower relative strength basis, but we'll get to the chart why I'm getting so bullish on this. In that group, it is the 9th strongest on relative strength basis out of 37 and number 1 on a composite basis. Checking the earnings, we had plus 925, plus 743, plus over 1,000% year over year, plus over 1,000%. That doesn't happen very often. So when you have a stock growing over 1,000% earnings per share growth year over year, you have to pay attention to that. Sales up 99, 495, 845, and then over 1,000. That's incredible. And after-tax profit margins, plus 26, plus 30, plus 42, plus 72. They're increasing their profit margins by 72% year over year now. Checking fund ownership on this, it dipped a little bit from June to September, 388 to 374, but taking a look at the volume off the low here, this isn't me and you buying, this is fund ownership starting in October. So I bet when we see the December fund ownership, this number is much, much higher. Going to the chart, you can see the heavy volume of fund ownership pouring into the stock as we shot higher here, had a 22% move or so. This has had 2 pullback days, each lower highs, lower lows, but we're still above the 8-day exponential moving average here. The fact that we had buyers step in on Friday and push this back right at $300 is a good sign. Buyers are stepping in even above the 8-day exponential moving average. Usually you see a pullback at least to that metric, and maybe we still do. But for now, buyers stepped in and we closed at 300. That's kind of a mental sticking point as well, since it's a round number. So with this, if we can get a couple of days trading sideways, we can get a lower entry point but a break over Friday's high, 306, that's just going to be a pullback buy. Again, this is going to be a main focus of mine, but if we could get more sideways actions, that's going to improve the trade setup. But COIN Coinbase. Next, we have DAVA. It's in computer tech services, which is the 12th strongest group out of 197, earning it a group strength rating of A+. It's got an earnings per share rating of 98, very strong. Accumulation distribution B+, and an overall composite rating of 99. Taking a look at relative strength, also in the 90s with a 96. When you can pair 90 or above composite rating with 90 or above relative strength rating, it's a name I want to focus on. Within the group, it is the seventh strongest out of 48 on a relative strength basis and tied for first on a composite basis. Taking a look at earnings, we have plus 13, 0, plus 62, plus 104 year over year. Sales up 21, 26, 35, 65. So you have acceleration of sales, which is important to see. And then after-tax profit margins, plus 15, plus 15, plus 17, plus 18. Taking a look at fund ownership, that has been increasing from 159 last September to 195 this September. Zooming out on the chart, you can see the nice 250, 28. All those moving averages are in the right order. Had a very strong move up, about 78%. And then when the market pulled back, this really flushed quick. Let's see, 19% pullback. Got saved by earnings, popped higher. I think there's 30-ish% move up. And since then, we're just flagging out above the 8-day exponential moving average. When I talked about this last week, I was saying a break over this candle would be a potential buy point at 153.42. But see, we had a nice shakeout on, that'd be Wednesday, and then Thursday morning, took out the lows in this flag, bounced right back up, closed very strong on Friday, plus 1% while the market was down. So showing relative strength against the market. So with this, I'm going to be looking at a break over October 19th high of 153.22 as a potential buy point. Or you can draw a downtrend line and then line that up with a possible flat top breakout. Friday's high 151.06 is also a place to manage risk against. So really like the shakeout, strong fundamentals. This is DAVA. Next we have DoorDash, and itself is in a very weak group at the moment, D+ group, retail and internet, which you can argue, should it be in that group, but that's the 152nd strongest out of 197 groups. But within the group, it is 9th strongest on a relative strength basis and 11th strongest on a composite basis. It's got a relative strength rating of 76, just because it's starting to work up the right side of the base here. It has a accumulation distribution rating of A, which is really nice to see. You want to see heavy volume on up days, light volume on pullback days, and that's what this indicator is showing. Taking a look at the earnings, we have had negative earnings last 4 quarters, so can't show year over year metrics, but sales were up plus 268, 226, 198, and 83. So we're still increasing sales, but kind of at a decelerating rate. And after-tax profit margins are negative. So on a fundamental standpoint, that's a yellow flag to me, but on a more technical standpoint, relative strength rating, 76 from an IPO base, something to take a look at. Fund ownership on this has been increasing from 323 to 572 since it IPO'd earlier in December. Looking at the chart, this was a name that I traded through here. We had a nice tightening of price and then a nice breakout. I got stopped when we took out the low in this area, so on this day, which I felt kind of foolish about, but then the market rolled over. We pulled back 10% to the 50-day moving average. Similar to the DAVA, we had that first pullback, and then we undercut the low there. Buyers stepped in right around the 50-day moving average, and then since then, we've had a nice bounce up, about 12%, and now we're just consolidating above the 8, above the 20, and 50. We got all the moving averages in the right order now, and volume is lightening up. Ideally, we can see price tightening up along with that volume, just so we can manage our risk a little bit better, because if you're buying with a break over Thursday's high, putting your stop under the lows, 4.3%, which, I mean, for most of you, maybe that's not very large, maybe use 7% stops, but ideally, if I could keep a stop at 3%, that would improve my trading metrics. But DoorDash, looking for a break over 220 27, Thursday's high. As much work as I put in scanning for the best setups, it's possible that I missed a few along the way. So please help me out by commenting below your favorite trade ideas going into the week. Thanks for your help, and let's get back to the charts. Next we have GDYN, and full transparency, I do have a position in this stock looking to add this week. Group strength rating A+, very strong. It's in computer tech services, which is 12 out of 197. Within that group, it's the second strongest on a relative strength basis because you can see it has a relative strength rating of 98 and 15th out of 48 on a composite basis. Composite rating is 94, so still very strong. That's just how strong the group has been. Accumulation distribution, B+. Let's take a look at earnings. We went from -78, -75 to even, and then +900 most recent earnings. Sales -16, -6, +21, +113. So really turning the story around for this company. Plus 9.5, +7, +8, +13 for after-tax profit margin. Taking a look at fund ownership, that has been increasing as well. We did pull back in September to December from 115 to 104, but since then we started climbing higher, 121, 167, and 218. Similar to Coinbase, this is going to be a main focus of mine going into next week. We had this nice, very strong 130% run up until September 7th. Since then, we've traded sideways for 34 trading days, about 7 weeks consolidating. Now we're starting to work on the right side of the base. We're above the key moving averages, the 50, 20, and the 8-day exponential moving average. We're also above the main part of the volume shelf, and that coincides with the 8-day, so possible good support at that area. What I would be looking for to add to my position is a break over this downtrend line, which kind of is right in line on Monday with Friday's high, 31.12 as a possible buy point, GDYN. Got 3 more for you. Next is SI, sticking with the cryptocurrency theme. Group strength rating, B+ right now. This is in the banks group, so that's fine. Accumulation distribution, B+. Composite rating, 99. Earnings per share rating, 99. And relative strength rating, 99. Very, very strong. It did just have earnings, and we gapped down on that. We'll take a look at that in a second. Within the group, it is the strongest stock out of 67 on a relative strength basis and strongest on a composite basis. Taking a look at earnings, we were plus 147, 139, 176, and 138. So 4 quarters, year over year, all over 100%. Very strong year for SI. Let's take a look at sales, plus 16, plus 26, plus 82, plus 123. So you have acceleration of sales. And then after-tax profit margins, also very strong, plus 34, plus 41, plus 49, and plus 45. Fund ownership on this has been increasing steadily from 52 December 19 to 336 this September. So SI had this nice run up with crypto, 75% off its base's low. Since then, we did have earnings where we gapped down. I think it was about 14% move. No, hold on. Measuring from the low, yeah, a 13% close on that first day. But that first day's lows have held. Buyers stepped in. We had a nice reversal on the what would that be? Wednesday. Consolidated Thursday, and then just some volatile action. If this can tighten up and trade sideways, that improves the trade. I'll say that for almost every setup. The more patient we can be, the better it sets up. But right now, people are disagreeing over the price because you see from the high to the low on Friday's candle, that's 8%. That's pretty volatile. Where are you putting your stop loss and not getting shaken out with just normal volatility at this point? That's the only kind of warning I have with this one. I'll be taking a look. If we could just break over the highs and I can use a smaller time frame like the 15-minute candles and find an area where I can get a 3% or 4% stop, then I'll look to take the trade. But for now, just going to give it some time to find support, find resistance, tighten up, and then we can manage risk against that for SI. Next, we have Unity Software, which is the ticker U. Similar to Dash and Coinbase, this is working on the right side of the base here. We got a B group strength rating, 65 out of 197. Within that group, it's the strongest stock on a relative strength basis, but much weaker, 8th out of 11 on a composite basis. You can see we did not have profitable after-tax margins, so that correlates with negative earnings. Taking a look at sales though, sales are plus 53, plus 39, plus 41, plus 48. So nice sales growth. Relative strength rating, 87 on this. Fund ownership, we went from 226 to 594, increasing each of the quarters, so that's nice to see. With many tech stocks, this had a pretty strong pullback of 18%, undercutting the 50-day moving average too, which is kind of surprising. But right after that happened, the next day we closed back over and on stronger volume, so buyers really stepping in at that point. Good to see. We wedged up here, so that's not a trade that I want to take usually, but since then we're now starting to consolidate above the 8-day exponential moving average. We had almost an inside candle on Thursday, but an inside on Friday, so the disagreement over price after this move is getting less and less. I'm looking for more consolidation, but then a break over this downtrend line, which would kind of correlate with Friday's high, 147.74, is a possible buy point for you. Putting your stop under the low would be 4.3%, or under the low from Wednesday, 5%, so you can manage risk against that. And finally, we have Upstart, UPST. This has been the market leader of 2021, so the fact that it's starting to pull back to the 20-day moving average, I want to take a look at this. Group strength, A+. It's in finance consumer loans, which is a very strong group, third out of 197 right now. Within that group, it is the strongest stock on a relative strength basis. You see a relative strength of 99. And number one on a composite basis, you can see the composite rating of 99 as well. It's got an accumulation distribution rating of A+, the highest MarketSmith gives. Taking a look at the earnings, we had plus 1,000, minus 88, plus 340, and then over 1,000, the most recent earnings, which caused this gap up, and now running much, much higher. Sales up 32, 39, 90, over 1,000% sales growth, and then after-tax profit margin plus 15, plus 1, plus 16, and plus 30 year over year. Fund ownership went from 53 to 276 within the last 4 quarters. Upstart really started its run with those stellar earnings, gapped up, and then pushed higher. Gave you a couple places to manage risk against as it pulled into the 8-day exponential moving average a couple times. Most recently, when the market pulled back, this pulled back 19% from the high to low, so it did qualify for the high type flag setup. That's my favorite setup to trade, and it was a beautiful breakout where I sold most into strength. Got stopped out on the last couple shares I had on Friday as we took out the low, basically right at the open on Friday. I got stopped out. But now I'm out of the trade with no risk. I can reassess and take a look at putting the trade back on. Many stocks do revisit the breakout point before continuing higher. So the fact that we were pulling back on lighter and lighter volume, I didn't love Friday's move, heavier volume sell-off, taking under the 8-day exponential moving average, so that's why I cut the last little bit of the trade. But if we can find buyer support on the 20-day moving average or 21 EMA, whatever you use, we could see some consolidation. And this is more of a second half of the week trade. I don't know if I'm going to be buying just with a break over Friday's high, but 353.88, that would get you above the 8-day exponential moving average there. Maybe a starter position there, but a little bit of consolidation, allow that 20-day and the 8-day to tighten up. That would improve the trade setup. But Upstart has been the leader of 2021, something that I want to get my money back in once it looks like buyers are stepping in and supporting an area. And maybe we got a little bit of that on Friday. You can see a little bit longer of a lower wick, but on higher volume. So I want to give it a couple days to tighten up. But UPST Upstart. All right, that's going to be the breakout watch list for the upcoming week. If you enjoyed the video, smash the like button and subscribe to my channel where I make these watch list videos every Sunday, go live on Tuesday night to break down any stocks that you want me to look at, and make other personal finance themed videos. Have a great week and I'll see you Tuesday.